The secret to becoming wealthy is actually a lot simpler than you first thought. Now, becoming truly wealthy, there's a lot of mist and magic around the aurora of very wealthy, successful people. But I'm here to tell you, if you follow these 3 simple investment steps, you can actually become very financially wealthy yourself. Now, the 3 investments, in my opinion, you need to become wealthy over a safe, long-term period plan is 1, precious metals, specifically gold bullion; 2, index funds, specifically the S&P 500; and 3, property, more specifically buy-to-lets. Now, I'm going to be going through these 3 individual investments, the benefits to them, and how and why they will make you wealthy in a long-term, low-risk holding position. Now, there's no secret to becoming wealthy. It's just that the knowledge is out there and you have to find it yourself. If you read enough financial books, you'll learn that there's simple methods that these rich and wealthy people consistently do. And it's being consistent, and it's lowering their liabilities versus their asset column. Now, starting off with the first one in my top 3 for becoming financially wealthy is gold bullion. This is an asset and investment that I consider to be my low risk, safe option in my portfolio of investments. Gold bullion is known to hedge against inflation, to preserve your wealth against economic financial turmoil, and it's proven to be a really safe asset to preserve your wealth. Case in point, from the year 2000 to 2020, it's gone up over 500% in value. So gold bullion is a very low risk investment you can make to preserve your wealth, maybe while you're saving for a bigger investment, or if you're just looking to protect your wealth in general by putting it into something that is going to appreciate in value and not go down from inflation. So number 1, not in a particular order though, is gold bullion. That is my safe investment. Holding that over a long-term period is essential because there are premiums you pay on your initial purchases. You do tend to have to hold gold bullion over a long-term period to recoup the investment you've made. But over time, what you hope is the value of gold bullion increases. And now you could say, well, what if it doesn't increase? Well, in my opinion, I think it will. A good way to predict the future is to look at the past. And as I said, gold has increased in value massively, and I think it will continue to do so. So it's proven for me as a really safe investment to preserve your wealth. So essentially, gold bullion is a wealth preservation device while your other investments work for you. That is the safe investment. Now, moving on to a low to medium risk investment, number 2 in my portfolio of investments, is index funds. More specifically, the S&P 500. Now, I am a big fan of the S&P 500, and I think fairly so. It's extremely popular for being a very low risk to medium risk investment fund where you can put capital into it on a dollar cost averaging basis, which is where you invest at the same time and the same amount every single month to get the best price over a long period term. Now, the S&P 500 again has proven to be a very low risk to medium risk investment for putting your money into funds that can potentially dramatically increase the wealth you have put into it. Now, for example, if you invest £50 into the S&P 500 over a 20-year term, you'll be looking at investing around £24,000 of your own money, but you are looking to return around £139,000. So on a mere investment of £24,000 over a 20-year period, dollar cost averaging basis, you can see a return of over £139,000. Now, this effect compounds massively the more you put in, because the more money you put in, the more money you make and the more interest you get refunding into your account if you've got it on an accumulating basis. Now, an accumulating fund is where the money reinvests back into your pots, so it makes your money more money. Essentially, every pound you put in makes another pound, and that pound works for you, and then that pound works for you you. So it's a massive compounding effect. So the index fund of the S&P 500 is, in my opinion, a low to medium risk investment that allows me to be very diversified in owning the top 500 companies in the United States, spreading out my risk, but also investing in something that's proven to be very, very safe. Again, this is a long-term investment. You tend to see really great yields after around 7 years, but even so, from 5 months in, I've already seen yields up into the green consistently. I think once it's only dipped below into the red, and that was for a very, very brief moment. So the index fund of the S&P 500 is for me an absolute essential low to medium risk to hold in your portfolio. Now moving on, property has got to be the third one in my investment portfolio, specifically buy-to-let rentals. Now these I would consider a medium to high risk. There's a common misconception that you can't go wrong with bricks and mortar, but I'm going to say that you can, because there is big risks when it comes to renting out a property. Case in point, you could have tenants that absolutely crash your property. They could not pay. If you haven't locked in with a good estate agent that covers your rent, if your tenant doesn't pay your rent, you're going to be looking to pay those mortgage payments until your tenant coughs up their rent, if they ever do. So there is medium to high risk when it comes to buy-to-let properties. Having said that, they are a fantastic investment because it creates a passive income. You get a monthly rental yield, and the costs generally tend to be rather low. You tend to have your estate agent fees and any maintenance, repairs and stuff like that. You can keep your maintenance costs down by doing a good review of the tenants you allow into your property. Not only that, but property always tends to increase in value. Property does carry its own weight, so it's very, very strong, and it's not often affected by the markets. The market doesn't tend to sway property prices too much. Normally when there's financial turmoil like there is in the UK right now, inflation and a little bit of a recession, that does tend to affect properties a little bit more. But as a long-term investments, in my opinion, property have proven to be a very good asset. Now, a lot of people like Robert Kiyosaki, a very successful entrepreneur, considers property to be a liability. But I don't think he considers it to be a liability when it's a buy-to-let property. When you're buy-to-letting your property, somebody's paying your mortgage for you. So you could look at property as a potentially very good retirement fund. Not only is it giving you a monthly passive income, and it's all about increasing your income on a monthly basis so you can reinvest it, but it is increasing in value over time. So I'm a big fan of buy-to-let properties being a part of my portfolio. So that is 3 massive investments that I think all you need to be successful in a long-term holding position as an investor. Gold bullion, index funds, the S&P 500, and property such as buy-to-lets. I think with those 3 investments over a long-term holding period, you can become truly wealthy. Now, I will say that the benefits of these 3 investments being a long-term investment plan would benefit you if you're younger than older. If you're maybe someone that's in your 50s, you've got, 16 years to get those investments built up before you really start considering a late retirement. But if you're in your late teens, 20s, 30s, or even 40, I would say, you've got plenty of time to hold those 3 funds, those investments in your portfolio, and that can give you a really, really nice early retirement, or it can be just to give you a much better life that you're looking to live. Now, it is important to have a diversified portfolio. Of course, you can have much higher risk investments to potentially give you better yields, but they also bring you possible bigger losses, maybe crypto as an example. But me as an investor, I think every investor has their own targets and their own goals and the way they invest. I like to invest in things that I truly understand, and I prefer investments that are low to medium risk, essentially, because I essentially have time on my side to let those long-term investments work for me. Now, I will say a massive point. I think mindset and budgeting massively comes into play with this. I think you need to have a strong mindset to be able to stay consistent with these investments, because they are a long-term investment, and you need to stay consistent on an investing basis to make sure your dollar cost averaging your way into a good investment. And of course, you've got to budget. You need to allow yourself enough savings and income to be able to invest in all three of these on a regular basis, whether that's buying a little bit of gold bullion once a month, putting in the same amount of money in the S&P 500 every month, or saving up enough money once every maybe 2 years for a buy-to-let property. So let me know what you think, but in my opinion, with those three investments in your portfolio, that is all you need to become truly wealthy on a long-term plan. I hope you've enjoyed this episode. I've really enjoyed filming it. A big shout out to the channel members. You guys are making up to about 16% of the channel revenue, so it means an awful lot. If you've watched all the way till the end of this episode, wow. Well, I do really appreciate your valuable time. Thank you very much for watching, and I'll see you all in the very next episode. Bye-bye.